Hello fellow traders, welcome to another tutorial video. Thank you very much for your support and for subscribing to my channel. I got a message to show you the channels and breakouts and the logic behind these technical patterns. Technical analysis is a very important part, and always keep in mind that it doesn't matter if you don't agree necessarily 100%. You might think that there are some random lines and shapes. In reality, they represent some movable support and resistances. I have explained the logic behind it and how they form. There are mechanics behind this optical price movement, and it's always good to know them. Of course, nothing is written in stone. There is no success ratio of every time we meet something in the technical part, like a head and shoulders, like a crown or something. We have no statistics if it will work. Most likely it will work, and you need to know how to trade them in your favor. And do not take in consideration only that. It's a very important part, and it will become easier to spot in time, of course. Remember what we said. When you're learning something new and you are getting into this trap that your mind tries to find some familiar pattern, create some illusions, things that are not there. You need some experience, and you will get it as the prices will fluctuate. This will give you a better idea and a better knowledge, let's say, of the market and how you will be able to spot them. I have found some examples in real markets. Here in this picture you will see the basic shapes. We have three types of channel: ascending, descending, and horizontal. The ascending channel, the idea, it's very simple. The prices, even though it's called ascending, will fall. It means exactly the opposite. The descending channel, it means that the prices will go higher, will sky high. And the horizontal channel, the prices are trapped at this point and they will go either up or down. I know it doesn't make any sense. Of course the prices will go up or down. Be patient and you will understand. Now, what we are looking for, what we want to do, we want to go with the trend. We have said that many times. So when we are in a downtrend and we are spot an ascending channel, also there are many sites that they can provide you this kind of information automatically. You don't have to pay so much attention. Of course, do not expect to trade the market just by following others. You are not traders, you just follow their trades, which is fine. If this makes you feel better, it won't change anything. Now, at a downtrend, we want to go short. We are waiting this channel to break. In a long, we want to go long when the trend is in the opposite direction, and of course we are waiting for the channel to break. Where there is a horizontal channel, the market will break either of these two directions. This is a spot. In all of these channel, we need some points that we can be sure that we have a channel. More than two, three. The theory says three. Of course, might be five. It might keep trending because the market moves in waves. So most likely you'll see them all the time: ascending, descending, and horizontal channel. The market, what's the idea behind? I have explained that many times. That the sellers and the buyers come into an agreement within these movable support and resistances, and the same when they are forming a descending channel. The horizontal channel is the same. The prices will break violently, and this is what you want to take in advantage. Of course, there are some fake breakouts. You cannot do many things about it, and you might have a channel inside the channel. You can use the Elliott theory. We have analyzed that in this channel. Of course, you need a lot of experience in order to understand how your market is moved, how your entities move, and you will need a lot of time to manipulate, let's say that, to understand. We are always have in mind that we might lose a trade. no one can guarantee to us that we will have a winning trade. Now, I have spotted some of them in some real markets, and let's go in and see. Now, let's open some markets. We go on the GBP yen. I have highlighted some pennants, some triangles, some wedges. I have explained all of them. Well, we will check for channels. Also, all these are inside the bigger channel. So, let's say that you are waiting at the prices. Here is our ascending wedge, which means the prices will go down. Indeed, our fellow trader fell a bit lucky, and the prices at the last point start to jump higher. But again, our trader have seen our video, so he's a bit confident because he see that pennant, and indeed the prices go into his favor. Many times the channel might not be clear, and you might have some wedges and some other technical parts inside the channel. This is very common. That's why sometimes it might become confusing, and if you change time frames, sometimes the channel will be much more clear to identify, much more smooth. So at this point, many traders would agree before everything happened, you know, because when it's happening in front of you and in live markets, you are not able to identify it right away. That you have also one small channel at this part, some movable support, and the other might go to the other way. Remember what I've said when we are trading, and I am referring to the episode related to candlesticks. Can you understand? I will leave that in your judgment. What is that candle? The prices goes up and down and leaves to the other direction. There is a candle that will look like this. That's why we tell you to, I have told you many times, you need to investigate when you are entering a trade. And also, if you change time frames, you might spot a candle, and if you zoom in by lowering or highering the time frames, you will be able to identify it easier. Now at this point, someone might think that there is a potential double bottom or a multi bottom, because the price is rejected too many times and it is a bit symmetrical. So here it comes a problem. Of course, it was never a double bottom. The prices penetrate so easy. They didn't even go higher. So you are safe to continue. And what I mean by that, I have explained you. In this part, buyers and sellers are into an agreement. So the prices is taking a breath. This might also change the market direction. So you are might waiting the prices to jump. So for example, if you are in a short trade, you need to adjust your stop losses, because you are expecting the market to make the move. If it's in your favor, of course the prices move lower, that's fine. But sometimes it won't be in your favor. The prices might jump, and this will become violently. So you've lost a very important part of your trade. I have analyzed that. Also, in our trading, you do not go into your trade right away. You leave some bullets. And the same happens when you are choosing your targets. It's good to use several targets. Of course, when you are newbies, you don't have to do that. This will come with experience. I have said that many times. Let's go to the next one. Sometimes it might be choppier. It won't be so clear. And of course, if you change time frame, it will disappear. It will be just a candle. And this will create a problem. Try to stick to the time frame that you've already seen. And remember how easy it is to get confused. You might see triangles everywhere, and it's very easy to get confused, because this is how the market is moved. And that's why trading is hard, and you need experience. It doesn't matter if the triangle didn't work, that's fine. Go to the next trade, get over it. Again, as I've said sometimes, it will be much smoother. This gives us a sight in the market. Buyers and sellers come into an agreement at this particular price. Now this might create a support, might create a resistance. Check the time frame that we are now. We are in the 15-minute. So you understand that you don't have too much expectation. The price didn't stay too long. Of course, we have also the theory of relativity. Time is relative, especially when you are trading. You must learn to recognize, to understand what's happening in the 15 minutes, in the 30 minutes, in 1 hour, in the 4 hours. You have to get familiar with time, especially when you are trading. Now, it looks like the previous one. This is also one trade that I was short in Australian. I got a trade. This was just a signal to continue my short position. I moved my stop loss at this point, and eventually I got my target. On the Euro Yen, we have the same. We have a channel that we also traded, and it got us profitable. I have explained that. If you check my account, I think it's like 38%, maybe 39%. I am not sure. And also on the opposite direction, on the USD Yen, we didn't took any trade at this point. Now you see that we have a descending wedge. So the price is violently broke and went to the other direction. And another triangle here. You understand now the problem. It can be hindsight. Yes, it can be hindsight. Someone, because it moves into a trend, might say that it's better to adjust, have a clear line. You might get into that mistake at any point. Get used to it. You might lose the trade. Even if the prices are in your favor, you might lose the trade. So imagine at this point, after using all this wavy, to start going short again at this point, because you identify the 3 points that we've already said. But it's better to go in the direction of the market and keep that in mind all the times. Yes, you can also combine that with the Elliott theory. We have analyzed it. Now look what happened to the prices. They went to the direction of the trend. Most likely this is the place. This is what we need to search for. Again, thank you very much for the video. I hope I'll see you in the future, and trade safe.